In a world where cryptocurrencies continue to shape the financial landscape, recent developments have created significant ripples. From regulatory reforms in the UK to predictions of a massive Bitcoin price surge, the crypto market remains in flux. Here are today's top 10 stories you need to know. As the cryptocurrency market continues to grow, it faces an increasing number of regulatory challenges. Policymakers around the world are grappling with how to effectively regulate digital assets while fostering innovation. This balancing act is crucial, as regulations can either support or stifle the growth of the crypto industry. Recent discussions among regulators highlight concerns over consumer protection, market stability, and the need for clear guidelines. The outcome of these regulatory efforts will have significant implications for the future of cryptocurrencies. Investors and industry players are closely monitoring developments, as the right regulatory framework could pave the way for broader adoption and acceptance of digital assets. As these discussions evolve, it will be essential for the crypto community to engage with regulators to ensure that their interests are represented. The next few months will be critical in shaping the regulatory landscape and its impact on the crypto market. In the current cryptocurrency landscape, Ethereum has been showcasing relative strength compared to Bitcoin. While Bitcoin struggles under bearish pressures, Ethereum's performance has been more stable, indicating a potential shift in market dynamics. Analysts note that Ethereum's underlying technology and use cases continue to attract interest from developers and investors alike. As the market evolves, Ethereum's ability to adapt and innovate could position it favorably in the competitive crypto ecosystem. This relative strength may attract more investment to Ethereum, leading to increased market participation and potentially higher valuations. Observers are closely watching how Ethereum responds to market fluctuations, as its resilience could pave the way for future growth. The coming weeks will be pivotal in determining whether Ethereum can maintain its momentum amid broader market uncertainty. In the realm of new crypto projects, AlphaPepe is making headlines with its presale nearing the $2 million mark. The project has garnered attention as it offers unique features that appeal to investors looking for the next big opportunity in the crypto space. As the presale progresses, potential backers are evaluating the project's fundamentals and community engagement, which are crucial indicators of long-term success. The enthusiasm surrounding AlphaPepe illustrates the competitive nature of the cryptocurrency market, where innovative projects continue to emerge despite broader market challenges. With the presale gaining traction, it will be interesting to see how this project performs once it officially launches. Investors are advised to conduct thorough research before participating in new presales, as market dynamics can change rapidly. The next steps for AlphaPepe will be crucial in setting its trajectory within the crowded crypto ecosystem. As the cryptocurrency market grapples with persistent volatility, investor sentiment is experiencing notable shifts. Recent trends indicate that traders are becoming increasingly cautious, a response to the ongoing uncertainty stemming from regulatory changes and significant market corrections. This climate has resulted in a marked slowdown in trading volumes as investors reassess their strategies and priorities. Many are adopting a wait-and-see approach, carefully monitoring market developments before committing additional capital. Analysts are split on future price trajectories. Some anticipate a rebound, while others caution against possible further declines. This situation has heightened the focus on risk management, with investors prioritizing stability over speculative ventures. The complexities of navigating the crypto market during these turbulent times underline the need for adaptability. As regulatory frameworks evolve and market dynamics shift, investors must stay informed and agile. Looking ahead, the ability to respond to emerging trends and regulatory updates will be crucial for those seeking to safeguard their investments effectively. Institutional adoption of cryptocurrencies is gaining momentum, a trend highlighted by recent regulatory actions in the UK. The Financial Conduct Authority and Bank of England are setting the stage for a more robust crypto framework, aiming to attract institutional investors back into the market. The establishment of clear guidelines surrounding capital requirements and disclosures fosters a more secure environment for institutions to engage with digital assets. As these regulations take shape, many industry experts believe that we could see a surge in institutional investment in cryptocurrency. This renewed interest could potentially stabilize the market and increase liquidity, benefiting both institutional players and retail investors alike. The coming months will be critical as firms assess the impact of these regulations on their investment strategies. It will be interesting to monitor how the institutional landscape evolves as these frameworks are implemented, and whether this will catalyze further growth in the crypto sector. The rise of stablecoins is transforming the financial technology landscape. Recent analyses reveal that these digital currencies are providing fintech companies with innovative monetization models. By integrating stablecoins into their operations, fintechs can offer clients greater stability, ease of transactions, and lower costs. This integration allows for enhanced liquidity and efficiency in financial markets, which is becoming increasingly important in a volatile economic environment. As more fintechs adopt stablecoins, the potential for new services and products will likely expand. Moreover, as regulatory frameworks around stablecoins become clearer, these digital assets may gain wider acceptance among consumers. The evolving landscape presents both opportunities and challenges for traditional financial systems that must adapt to this new reality. As the trend continues, industry leaders are exploring ways to leverage stablecoins to better serve their customers while ensuring compliance with emerging regulations. The future of fintech may very well hinge on the success of stablecoin integration. In the world of decentralized finance, Pepeto has made significant progress towards launching its DeFi exchange. After completing a full smart contract audit, the platform is now in its final testing phase. This step marks an important milestone in the development of the Pepeto exchange, which aims to provide users with seamless cross-chain capabilities. The successful audit by SolidProof assures potential users of the platform's security and reliability, which is paramount in the DeFi space. As this exchange prepares to go live, it represents a broader trend towards the maturation of DeFi platforms globally. The anticipation surrounding its launch highlights the growing demand for innovative financial solutions that leverage blockchain technology. If successful, Pepeto could position itself as a key player in the DeFi market, potentially attracting a significant user base. The crypto community is keenly watching these developments, eager to see how this exchange will operate in a competitive landscape. As Bitcoin faces ongoing market challenges, traders and analysts are looking towards a potential game-changing event. Many are predicting that the formal passage of the Clarity Act could act as the ultimate catalyst for a significant price boom. This legislation aims to provide clearer regulatory guidelines for cryptocurrencies, which have long been viewed as a risky investment due to uncertainties surrounding their legal status. By establishing a more defined framework, the Clarity Act is anticipated to ignite institutional interest in Bitcoin, with many fearing they might miss out on substantial gains. If institutional investors begin to re-enter the market in response to these regulatory reforms, it could lead to a surge in Bitcoin's price, potentially reaching new all-time highs. The prospect of a $10 trillion market driven by FOMO from institutional players is causing excitement among crypto enthusiasts. However, the timeline for these developments remains uncertain as market dynamics continue to evolve. Should the Clarity Act be passed, it could reshape the landscape of cryptocurrency investment, attracting a wave of new capital and fundamentally altering the perception of Bitcoin in traditional finance. Investors are advised to remain vigilant as this situation progresses. The price of Bitcoin continues to struggle under significant downward pressure, recently dropping below critical support levels. This decline has thrust Bitcoin back into a bearish market phase, a stark contrast to its previous highs. This downturn follows a troubling period for the entire cryptocurrency market, which has collectively lost approximately $2 trillion in value over recent months. Such a dramatic decrease has left many investors reeling and questioning the stability of digital assets. Despite these challenges, some analysts are cautiously optimistic, noting signs of potential recovery. Key indicators like on-balance volume have begun to show a gradual upward trend, suggesting that a bounce could be on the horizon. While Bitcoin remains technically weaker during this phase, Ethereum and various altcoins are exhibiting relative strength, hinting at a possible broader market rotation. This divergence may indicate that investors are reallocating their capital to assets with more resilience. Traders are closely monitoring the market for confirmation of a recovery, which could pave the way for future gains. Should the market manage to reverse its current trajectory, analysts believe Bitcoin could reclaim much of its lost ground, making the upcoming days critical for its price movement. In a groundbreaking move, the United Kingdom has made significant strides toward crypto regulation. The Financial Conduct Authority, alongside the Bank of England, has unveiled new rules aimed at creating a structured environment for both consumers and institutional players in the cryptocurrency sector. Historically, the UK's stance on crypto has been perceived as sluggish, limiting its competitive edge in the global market. However, recent regulatory actions indicate a shift in this perspective. The Financial Conduct Authority finalized essential guidelines surrounding capital requirements and disclosures for crypto firms, which are crucial for ensuring transparency and stability in this volatile market. Furthermore, the FCA has committed to collaborate with the Bank of England on a framework for stablecoins, a critical area for future financial stability. This proactive approach could potentially stimulate innovation and attract investment in the UK crypto landscape, fostering a safer environment for users and businesses alike. As a result, many industry experts believe that this could bolster the UK's status as a leading hub for cryptocurrency activities, drawing in both startups and established firms. The path ahead will determine whether these reforms can effectively foster growth while ensuring consumer protection. With the right balance, the UK could emerge as a global leader in responsible crypto innovation, setting a benchmark for other nations to follow. Thank you for joining us for today's news roundup. Which story shocked you the most? Let us know in the comments, and don't forget to like and subscribe for more updates.